Alrighty, so let's get started. Good afternoon, everyone. Thank you all for joining us here today. My name is Jerome Franks, president of CFA Society, the Bahamas. And on behalf of the society, I welcome all of you here today for today's seminar on the topic, the state of the Bahamian economy, policy, and progress. Today's seminar will be presented by our fellow CFA charter holder, the Governor of the Central Bank of the Bahamas, Mr. John Rolle. We're very pleased and grateful to have Mr. Rolle back with us today. We all know he has a very busy schedule, so we are truly appreciative for the time he has made available to us. At the Society, it is very important to us to have these intellectual discussions with our leaders and with you, the public at large. We believe this is how we foster growth, determine solutions, and help to progress the country further. So I'm very happy to have Mr. Rolle here, and I'm very happy everyone can join us here today. All right. So for today's format, I will begin by introducing the society. Then I'll introduce the speaker and hand it over to him for the presentation. Afterwards, Mr. Rolle will accept questions. If you have a question, you can raise your hand using the Zoom chat feature. The host will select you and you can unmute yourself and ask your question directly to Mr. Rolle. Or you can also send your question to the host who will ask on your behalf. Okay, so for those of you who may not be as familiar with us, CFA Society, the Bahamas, is an organization of financial and investment professionals. Majority of our members hold or are pursuing the CFA Chartered Financial Analyst designation. Among our initiatives, we advocate for the CFA program and designation. We advocate for best practices in the investment community. We do outreach to the public by providing educational seminars and speaker events. And we provide networking and career opportunities, as well as educational opportunities to our members. If you'd like more information on us or a CFA designation, please feel free to visit our website, cfasociety.org/Bahamas, or you can email us at info@thebahamas.cfasociety.org. Okay. So without further ado, allow me to introduce our speaker, Mr. John Rolle. Mr. Rolle was appointed Governor of the Central Bank of the Bahamas in January 2016. Prior to this, he served as the Financial Secretary in the Ministry of Finance, where he spearheaded the implementation of government's fiscal reform initiatives. Mr. Rolle also served on the Executive Board of the International Monetary Fund as a Senior Advisor to the Executive Director for Canada, Ireland, and Caribbean constituency. In this role, he was a principal advisor on economic policy matters, supporting advocacy on behalf of Caribbean countries. The governor's substantive career from 1990 to 2012 was also in central banking. He served in various capacities at the bank, progressing up the ranks of the research department. The governor also contributed as an adjunct lecturer in economics at the American University in 2008 in Washington, D.C., and for many years as a part-time lecturer in economics and statistics at the University of the Bahamas. He holds graduate degrees in economics from the American University in Washington, D.C., and degrees in economics from the American University in Washington, D.C. and Carleton University in Ottawa, Canada. He was also an undergraduate of the University of Western Ontario, Canada, and the College of the Bahamas. He has also earned the Chartered Financial Analyst CFA designation, and he has published scholarly articles in a number of professional journals and continues to pursue research on monetary, fiscal, and exchange rate policies. So once again, welcome everyone, and thank you, Mr. Rolle, for joining us once again today, and I hand it over to you.
Thank you very much, and good afternoon. It's a pleasure to be here to provide this presentation on the economy. I've tried to give a heavy focus in discussing the policy issues which relate particularly to the central bank. And preparing for this, I reminded myself, or I prompted myself when thinking about the economy to always ask, what is it that, how does the central bank fit in? And is the central bank doing anything, or can the central bank do anything as regards the economic issues? So I intend to bring some of that out in my presentation. I know I have some central bank colleagues likely in the seminar. So let me also acknowledge that in putting together a presentation like this, you benefit a lot from the input of your colleagues. So I want to thank them for helping me. So we can begin. So what I want to do, I'm going to try and make certain that we leave some time for question and answers. I think I have more than enough material. I know I don't cover everything, but to focus first a bit on the economic outlook and what it means for various policies that we have to advance in the Bahamas. Talk briefly about the interaction between what happens on the fiscal side and monetary policy. And then as I get closer to the end, talk about some of the medium-term policy issues, which I think are important, near-term and medium-term policy issues. Talk a bit about the regulatory outlook for the financial sector, still trying to keep it relevant for where we are in the economy. So I think we've all been following the developments, and so we would have seen that the economy has started to improve. And on this chart, we've put probably very old information as regards to the GDP growth projection and outcomes for 2021. So we know we will get new numbers very soon, but they will show that there was some healthy pickup in economic activity last year, and we believe that 2022 that momentum is going to continue, such that by the end of 2023, the Bahamas may possibly be back to where it started pre-pandemic. That is all being driven by what's happening in tourism. We have continuing strong current of foreign direct investment, assisting with economic activities. And we also still have some rebuilding from Hurricane Dorian, which is going to drive some of the expenditures in the economy. All of those are going to, when you consider what's going on, is going to have some impact in terms of the outcome for the external reserves. Now, in this case, the outcome that we see in 2022 is not one necessarily of growth in the reserves, because as the economy gets back on its feet, there is going to be the continued use of funds that we've had sitting in the reserves, which are designated for Hurricane Dorian rebuilding. We, at the central bank, believe that the economy can sustain even more of the financing needs of the government in Bahamian dollars. We also believe that the economy, having regards to the impact of domestic spending and on the use of foreign exchange, that the economy can also embrace and tolerate higher spending from the domestic demand sources. And collectively, those suggest that we should anticipate some contraction year over year in our foreign reserve balances over the course of 2022. It is possible as we go into 2023 that we would begin to see the reserves grow again. Nevertheless, there are very, very important downside risk in our economic environment that we need to be mindful of. And I can assure you that insofar as the external reserves are concerned, the central bank does have the tools to continue to manage the reserves in a satisfactory fashion and ensure that we have the appropriate level of support for the Bahamian dollar fixed exchange rate. Tourism has recovered, I think, at a very strong rate relative to the lows that the economy experienced at the height of the pandemic. What this chart shows is that if you look at the seasonality in tourism and you compare what has happened in the last year and 2020 relative to 2019, 2018, before the pandemic hit and before the impacts of Hurricane Dorian were felt, that's the baseline for pre-pandemic. And what we see is that on a seasonal basis, there has been a steady recovery towards the baseline through the end of 2021. These are recoveries on a monthly basis. As we progress through 2022, we'll begin to see those comparisons for January and beyond, and to continuously progress towards 100% of where we were pre-pandemic. There's another chart that I wanted to show you, but I didn't have the time to add it, and it shows the forward booking indicators of occupancy in the tourism sector. And again, it shows that if you compare March of 2020, before the pandemic took hold, and you look at the forward-looking booking numbers, assuming at that time no one anticipated a shutdown, 2022 looks just like that. And so that tends to reinforce the idea that we're getting much closer to return to parity. And 2023 shows a consistent trend where the booking numbers are improved relative to this year. And so it points to the likelihood that the industry will be back to where it was before the pandemic. One of the indicators that we saw last year, this is a very almost real-time indicator, is the extent to which the foreign exchange inflows through the banking sector recovered amidst the pandemic. So, for example, you can see from this chart that in 2020, both in terms of purchases and sales taking place through the commercial bank, we had a significant drop-off. I think the estimates between the two values were in the 25 to 30-something% range. In 2021, the extent of recovery in foreign exchange flows was that we had almost reached the 2019 levels in terms of the receipts that were coming in through the banking system. And so there's no reason not to expect, given that we will have the full impact of a winter season this year for tourism, that those purchases will exceed or at least match what we saw in 2019. Similarly, the sales are pointing to the demand within our economy. And so we see the recovery as well, the strong recovery in demand. As a matter of fact, the banks sold more foreign exchange in 2021 than they sold in 2019, as you can see from this chart. In our domestic banking sector, as far as where we are in the outlook, the economy now is at a point where the banking system, we believe, is nearing the end of any deterioration in the delinquency rates or the non-performing rates. We expect that the height of those delinquency rates will be achieved this year, and before the end of this year, we'll begin to see a gradual easing in the delinquency rates. Nevertheless, delinquency rates by international standards are still very high in the Bahamas, and it's important to understand that when we start to look at the prospects for strengthened lending in the near term. We do not foresee that banks are going to, on net, be expanding credit to the private sector this year. That possibility is greater in 2023. And part of that is really because eligibility to borrow is driven by what's happening in the economy. And so the economy has to create the expansion in that pool of eligible borrowers, and then that will pass through to the banks. As a result, we do anticipate that the banking sector will continue to stay very liquid in terms of the resources that they have. Let's talk a little bit about risk in the economic outlook. One of them is COVID-19, and it it could undermine, on the downside, the pace at which tourism recovers. And the reason for that, one of the reasons for that is that the global vaccination efforts are still suboptimal in terms of where I think the health sector experts expect that we should be. And so it means that we're still vulnerable to additional disruptive waves of COVID-19 outbreaks or new variants. And so that could undermine what's happening in terms of tourism. So on the international side, the vaccination risk presents itself. On the domestic side, we have to also appreciate that the Bahamas is continuing to close vulnerability gap in terms of the health sector, domestic vaccination rates, and all of those in the event of a new outbreak could have unfavorable impact on travel risk ratings for the jurisdiction. And again, that's something that is a risk for tourism. And in the hotel sector, particularly, it is the group business that is being more adversely impacted than, say, the family vacation. And it's the group business that yields higher rates of return for the industry. So it's important that the domestic capacity to manage COVID-19 vulnerability continue to strengthen because it benefits tourism. Inflation is also something that we need to keep on the radar. For us, it's coming through imports. I would stress that inflation has unequal impact on households because of the way we measure inflation. What it will do, above all, as it is coming through an import, it means that for every item or a set of goods that we're importing, we're going to be using more foreign exchange resources to pay for those. So that also factors into the outlook and the likely increased use of foreign exchange and foreign reserves in 2022. The other issue is that in countries like the United States and our other tourism source markets, monetary policy is acting by raising interest rates in order to dampen the inflation impact. That means too that the economies could evolve in such a way that some of the travel demand momentum is softened. We believe nevertheless that a lot of what is happening in tourism today is the release of the pent-up demand for travel. So that is happening in spite of the policy responses which are likely to try and temper the demand push or demand pull on inflation from the outside. I should stress, though, that the inflation that we're experiencing is not something that interest rate policy in the Bahamas can react to because it's being imported. And even when we have demand pressures or heightened spending in our economy, we typically don't see an inflationary impact because, again, that spending is usually linked to imports. And so increased demand pressures in the Bahamas also commonly show up in terms of how our foreign exchange flows are impacted rather than inflation. And typically, those pressures usually originate through the credit channel. And that's the reason why, from the central bank point of view, there tends to be a focus on the credit channel, how it impacts demand, and how that demand could create imbalances in terms of how the foreign reserves are trending. Inflation today, first of all, let me just speak very briefly about the two charts. First of all, look at the components that go into our breakdown of inflation in the Bahamas. And there are weights attached to them, which assume that on average, we spend a certain fraction of our total income on various categories of goods and services. So in the Bahamas, the weight in the inflation index for housing, water, and energy is 32%. So if there's a fuel surcharge, electricity, et cetera, it's going to show up in the housing component of the retail price index. Transportation also picks up a lot of the fuel, and that's by the National Statistical Institute estimate represents about 12 7.5% of our expenditures. Food, and the average is about 10.2%. Health is 4%. Now, look at the middle column and the extent to which costs have increased cumulatively in those areas since 2013. 2013 is used only because that's the year when the Department of Statistics would have rebased the index. So from 2013 to almost now, most of these costs have not increased much relative to the overall retail price index. Housing costs have trailed behind the index. Food costs have matched it roughly, food and beverage costs. Health costs, we say it's only about 5% of the average household expenditure, but healthcare costs in the retail price index are up by approximately 40% over that period. And however, when you look at the most recent calendar period, which took us up to the end of October of 2021, so we will soon have information that is more current, you can see that the majority of the movement in housing costs and the inflation index since 2013, the majority of that occurred last year. Almost at least a third of the transportation cost run-up occurred last year. Only about 10% of the inflation that we saw since 2013 in food and beverage costs occurred last year. And a very small fraction of the health care costs occurred last year. But it does suggest that if we're going to see the impacts in the near term, we are likely to see a greater manifestation in cost increase in some of these components. But also bear in mind, as I mentioned earlier, the weight of these components in the inflation index for the Bahamas, which is important. Notice too that the last time we had high bouts of inflation in the Bahamas was around in the 2008 period. And as I will show now, these are very much linked to what's happening in energy costs. And that takes us to, another one of the risk in our economic outlook and the spillover impacts from the war in Ukraine, which, as we can all observe, it is having an impact on fuel and other commodity prices. And as you can see from this chart, when we had elevated fuel cost in the 2008-2009 period, and for a good amount of the period between 2010 and 2015, that represented, therefore, a significant share of the spending that we had to undertake in the country on our payment for goods and services imports were represented by what we were paying for fuel. In 2016, 2017, we got a bit of a break, and so the oil costs were not taking as big a chunk out of our expenditures. But you can see that going into 2021, again, fuel expenses are beginning to consume more of our foreign exchange, all else considered. Fuel expenses also feed into the costs in the travel sector, and so we need to be mindful of how it could impact the cost in the tourism sector. And so you can see from these charts, again, that if you were to try and blend the oil imports as a percentage of our total import expenditures for goods and services and how it has trended, there's a discernible co-movement between how much of our import expenditures are consumed by oil and the price in the global market. So we should anticipate that in the near term, we are going to be spending more of our foreign exchange on fuel imports. The war in Ukraine also has implications for our financial services sector, because like it or not, we are immediately exposed to the sanctioning regimes in the European Union and in North America. We cannot ignore those processes because banking on an international basis is an interdependent relationship. And there are some transaction and relationship norms which our domestic institutions and our international institutions have to adhere to at a minimum in order to have stable correspondent banking relationships. A bank without correspondent relationship is a bank that is not viable in operation. So correspondent banking relationship define very much the viability of a banking business, all else considered. We also have to be mindful that if you're factoring in commodity prices, fuel costs increase, those are drags on the global economic growth prospect. And again, they tend to illustrate some of the downside risk for tourism. Climate change vulnerability, we also have to be mindful of in terms of the risk. And the way to summarize this is that whenever we're hit by a hurricane, it takes a bite out of the public purse. It disrupts economic activity. And our vulnerability now is heightened because we're at a point where we say that it's essential to begin to reduce public sector indebtedness and to consolidate public finances. And that sort of means that at the same time, there isn't the kind of flexibility in the public finances that we would consider ideal. So that presents vulnerability in terms of the economic outlook for the economy. And some of those types of vulnerabilities you do not solve in 1 year. You have to plan for the medium term in order to diminish those risks. What does this mean for the central bank from a policy implication? Again, for us, our work evolves around making sure that we uphold the parity of the currency, and therefore, at a minimum, a lot of the risk and outlook in the economic environment influence how we proceed, say, with our exchange control policies and the like, as we have been on a program of gradual liberalization. But it means that in an environment like this, the focus is best put on how you can strengthen the administrative processes and improve the administrative processes, keeping the medium-term, goals around, further gradual liberalization and access to foreign exchange for investment purposes in mind, but mindful that in the very short term, it's prudent to manage the risk and to keep the foreign exchange unencumbered so that it can support and sustain trade without any unnecessary interventions or interference from by way of monetary policy. But at the same time, we're also in the near term continuing to have a higher level of comfort around domestic credit accommodation and domestic credit expansion, which you should also, take in the context that we in the very, very near term are not in an environment where there are any upward pressures on private sector credit, but it means that even if we go into 2023, there's likely to be continued room, to see, healthier prospect in the private sector around credit. The overlap between what the central bank does and the government does on the fiscal policy side is very important. In this space, again, a lot of that consideration or those considerations are around how the Bahamas fares in managing the sustainability of its currency peg. Not as the first consideration, but in terms of how, if you're financing or need to sustain financing needs of expanded deficits, how do you finance those deficits, and can you finance those deficits in such a way that you do not undermine the sustainability of the currency peg? And on that basis, when we look at the experience in the pandemic, the magnitude of the deficit that we experienced at the height of the pandemic were only sustainable because the Bahamas had a heavy reliance on foreign currency borrowing. And by sustainability and foreign currency borrowing, what I mean is that those deficits supported consumption expenditures, to some extent investment expenditures, which both draw on imports. They're only sustainable if you can identify the foreign exchange that will cover the import. So that's the sustainability in the context of the public sector financial management in the very near term, and how it impacts, a very core monetary policy objective. When we look at what's happening now, the economy is in a much better position to finance greater share of the deficit financing needs of the government. And so we see in 2022 and into 2023, an increasing capacity for the government to finance its deficit in local currency, or finance a greater share of its deficit in foreign currency. But if you look also at the government's medium-term debt management strategy, you would see that it also recognizes that some significant foreign currency borrowing is still necessary, given that we are on a gradual path, relatively gradual path, of whittling away the deficit and the funding gap. Over the medium term, we have to now begin to think about some of the other aspects of our policy environment, and how we address those issues that you're not going to always solve, say, in a calendar year period. So we know that a medium-term imperative is to increase our economic resilience at the micro and the macro. The micro level, I'm talking now about individual households and families. And at the macro level, you can throw in the government and the private sector. And there are various initiatives, some of which are in the central bank sphere. Others are outside of our sphere, but we can just speak to the importance of those. But the digital currency, for example, it speaks to a lot of the focus around how we strengthen our payment system for various aspects of resilience. But at the micro level and individuals, it's about seeing outcomes that better manifest higher savings rates in our economy, because savings now provide, for all intents and purposes, the level of financial security and buffers that you need in an economy that's buffeted by hurricanes and other setbacks. And in that mix also, we need to find ways to achieve higher levels of coverage around insurance at the household sector level. It's not going to help our cause to note that insurance coverage is expensive. You still need it. We have to confront the reality of what does affordability looks like in terms of existing in a state of housing supply where the housing at the family level can be affordably insured. So there's probably some give and take in terms of the size or the footprint of that real estate. And we have to face up to that. Just having a very large footprint, which you cannot replace if you get hit by an unfortunate severe storm, is not a comforting position to be in either. We have to speak to external sector competitiveness, and this is just a very, very high-level term, but it means a lot. How do you make the Bahamian economy competitive in general? And I think you can list, maybe 10 or more areas where this matters immediately. And competitiveness is usually summarized by how the outside world looks at how well you can manage the mismatch between the amount of foreign exchange that you're earning and the amount of foreign exchange that you're trying to consume. Because if you have a mismatch, it's quick to say, well, change the exchange rate and eliminate the mismatch. But that doesn't necessarily work in an economy like the Bahamas. But in a theoretical sense, it can say, well, if you could figure out if the exchange rate could eliminate it, this is what is the extent of your mismatch is. So when we talk about improving the competitiveness of our economy, it means that we're improving the outcomes where the inflows of foreign exchange are more strengthened relative to the outflows that we are creating through our various activities. And that competitiveness and efficiencies on multiple levels. And we also want to, in our medium-term space, augment our capacity for domestic source productive investments, meaning that we want to see more of our financial savings relate to investment in productive enterprises. We have to also, from a medium-term point of, and I'm deliberately not going to dwell too much on this. From a medium-term policy consideration, we have to continue to be conscious as a society that, tax reform is going to stay in the picture in terms of how it impacts our sovereign risk profile. So to the extent that we achieve outcomes where there isn't a great dependence on reform of the tax system, it doesn't mean that you have the luxury of targeting less ambitious outcomes, but it will mean that if and unless we're satisfied with the ambitions around the reforms, the other areas where those adjustments are needed will be increased. And since we have a very large audience of financial analysts here today, in theory, you've already priced in on some level or the other, what a sustainable path for fiscal policy looks like for the Bahamas. And you've already assumed in your stress testing hypothetical situation, what happens if some extreme points are encountered. And I could tell you that in those extreme points, you should not be deriving any comfort from the idea of sovereign default, because our sovereign has room to tap into much more resources if it needs to. And so we need to be mindful of that when we look at the outlook and what that means for the fiscal policy space. So transitioning from the economic in the present, talking a little bit quickly about the financial sector policy and regulatory outlook. And it looks like I have good time on my side. When we approach the financial sector in the Bahamas, there are dual set of objectives involved. Some focus on the domestic space and how that space performs efficiently in intermediating our financial resources, and other efforts focus on how we promote stability and growth around the benefits that we derive from international financial services. And in that space, we also try to do it in such a way that we don't create negative spillovers to our local economy. So in the domestic space, a lot of the policy outlook focus is around continuing to modernize the payment system for the reasons that it is to contribute to a more efficient space for commerce. We acknowledge that there's a lot to do in that area. And one of those reforms that is essential is further enabling a digital finance infrastructure. And part of that digital finance infrastructure is also recognizing that the check issuance and writing regime, quickly becomes a relic, and you need to make certain that how it is phased out, you improve upon the structures that would support payments in the future state. We also focus a lot in terms of safety and soundness of our financial institutions, because in all of this, the confidence around the use of the financial services and the financial sector space remains important. And there is a lot of work that the central bank is doing in this space and you're likely to hear more of it. Some of it you may have noted in terms of some of the changes around the Deposit Insurance Corporation and deposit insurance, which is now accessible to those in the credit union sector. But we also have to plan comprehensively for how we manage our financial institutions to maintain stability in the domestic space.
As I usually, we're large.
In the international space, one of the things that we're constantly
This is an
reminded of
extra, I
is
think.
that
This one.
one of the things that we're constantly reminded of is that you have to remain responsible members of the global community, and you have to keep the unwelcome attention away from your financial jurisdiction and from undermining the sector's progress. And that defines, in a nutshell, the continuous approach that we've taken to, strengthening our AML, counter-financing of terrorism regime, making certain that we have streamlined and tailored applications of regulatory standards to our financial space, which achieve the intended outcomes internationally. And the central bank is continuing to build capacity in these areas. I think when we look at the AML CFT regime, to the extent that it also has knock-on effect for the ease of doing business and transacting in financial services, we are going to have to begin to look even closer around possible mandates for continuous training of compliance, those involved in the compliance and AML functions, because compliance really, and the structures around compliance have a lot to do with how financial institutions operate and interact with customers. But the example of Russia and Ukraine is also important. Our financial institutions, and we've made this clear to our central bank supervised financial institutions, they're expected to undertake enhanced due diligence so that they operate strictly within the sanctions regimes which are enforced by our major economic partners. There's nothing new about that, because every banking institution monitors those lists, and they monitor the notices and the advisories that come out of the United States Treasury Department, what the EU is doing on an ongoing basis. And they understand too that in their relationship with correspondent bankers, these issues come up. So what the central bank has done is really reaffirmed that our expectations that in the situations involving Russia and Ukraine, they cannot and should not deviate from those standards and processes. That is very, very critical. Another area in the outlook that we are focused on is recognizing that there is a momentum now to look a lot more at the virtual asset space and what it means for the potential to harness additional benefits for the Bahamas and the Bahamian financial services sector. So the banking sector fits into that space. And so our focus at the central bank is looking at how we can be very clear around standards and guidance to our institutions so that they can provide the prudent and regulated support to the burgeoning industry. And when we talk about standards, it's ensuring that our institutions focus in an environment where we continue to stress and emphasize financial integrity around transactions that are going on. So that is very important. And therefore, it's focusing on those palatable aspects of the business, which is already coming across if you pay very close attention in policies that are even being promulgated by the Securities Commission. The standards that are being applied as such that the Bahamas continues to fall in line with international best practices and expectations around financial transactions. And so the central bank is developing and will soon provide more elaborations and guidance in terms of how banks and trust companies should also be conducting themselves in that space. So to wrap up, I said a lot about downside risk and risk and caveats in the outlook, but the bottom line is that economic conditions are improving and they're expected to continue to improve, but there are the caveats around that statement that it is important to bear in mind. From our perspective, our monetary and financial sector policies have to stay focused on managing and supporting the economic recovery. And that basically says that, we want the recovery to continue to be anchored around a stable currency peg. And therefore, that means paying attention to the factors that emerge in that recovery process that would allow us to continue to be on that path. We have to also stay focused on reforms that could improve international competitiveness. Central bank has a role to play in that process, as does public policy outside of the central bank, because competitiveness helps to bolster your objectives around your currency peg. Back to the point that I made earlier about it can help the country improve the net flow equation in terms of the foreign exchange dependency and foreign exchange movement through our economy. We also have to maintain heightened attention to, however, to the emerging downside risk, particularly in the near term around the economy. And to some extent that helps to frame some of the central bank's own policies in terms of the foreign exchange markets, but it also underscores the importance of managing our domestic side contributions to the recovery risk that tourism could face. The geopolitical tensions, by necessity, we have to be exercising enhanced due diligence in our international financial services operations, whether the central bank says so, or the government says so, or anyone else says so. We need to understand what our operational responsibility are. And we also need to recognize, insofar as these are tied into geopolitical tension, that these are an augmentation, or these tensions are an augmentation of the downside risk to the speed of our economic recovery. I should also say that we need to continue to recognize and perhaps admit more readily that insofar as the visibility of the fiscal management framework, that the Bahamas is a high, or some would say a middle to high income country with resources. Our government has important options around its taxation capacity that it can use if it is prompted to do so, and as a means of helping to steer the sovereign to an improved outcome. And that is very important in terms of how the kind of caution we should exercise in our reasoning around how the fiscal sustainability issues can play out. You need to think much more about that. So I will leave it at that. Thank you very much for your attention. And I believe we have a few minutes for question and answers.
Yes, thank you very much, Governor Rolle. Once again, we really appreciate it. And I'm sure there are many questions audience members may have. Once again, everybody, if you have a question, use the raise your hand feature in Zoom if you want to speak directly to the governor. Otherwise, you can send your message to the host, CFA Society Bahamas, and my colleague, Christon Moore. He will ask the governor on your behalf. So feel free to ask your questions at this time.
Okay, I'll start with a few questions I got in the chat. Good afternoon, Governor, again. So first question we have is, can you speak to any plans to work with the IMF to finance the fiscal deficit, if at all?
From a public policy point of view, that's not something that's on the table. I think there's full appreciation that if the Bahamas saw that as an attractive route, it could follow it, but there is no indication that it's a path that the Bahamas is going in. It does not, however, diminish the importance which we appreciate of the kinds of reforms that the Bahamas needs to undertake to continue to strengthen the outlook for the fiscal balance sheet.
Okay, thank you. I see Mr. Albert Thompson raising his hand. I'll ask him to unmute and he can ask his question.
Thanks so much. Can you hear me okay? Governor, are you there? Can you hear me?
Yes, we can.
Okay. All right. I saw something recently inside an article that a noted Caribbean economist, Marla Ducaran, continued to predict that the Bahamas will decline into an IMF-led debt restructuring by 2023 or 2024, given the country's high external debt burden. And she contends that the country would suffer a currency devaluation and that we are overvalued by 6 to 9%. I wanted to get your thoughts on that.
Well, you said a lot in that, but recognize that if you, let's use a very simple example. If you show up at the market with $10 in your pocket and there's $15 worth of goods on sale, and if you only have $10, it doesn't mean that the seller of the goods should lower their price to $10. You buy $10 worth, or you find a way to earn $15 and then you purchase the $15 worth of goods. What I'm getting at is that if an economy is faced with a pricing imbalance, it always has multiple options around how it corrects it. And for the Bahamas, the sustainable path to correct it is to make the economy more productive and more efficient. We know how to do that. We need to begin to do it more. So we know how to make the economy more productive. Irrespective of our profession or vocation, we should be able to define what it means to be productive in those professional vocation. If not, we have a problem around dealing with this efficiency. If you did nothing else but alter the price of your currency, you will alter the price of your imports. You will still need to import the same amount, and the prices may adjust. But if you don't fix other areas of your economy that are contributing to the imbalances, you'll just be in a repeated cycle.
Yes, Mama?
So that's important to understand. There isn't going to be, for an economy like the Bahamas, an easy out where you just devalue the exchange rate, even if you believe that's a likely outcome. It won't resolve competitiveness issues.
Yeah, the red light was on when I plug it in. So
Was I audible?
Yes, you were. Thank you so much.
I just want to follow up on the point too. Many other economists and analysts look at the Bahamas and analyze, how things can turn out. And you do so also in your personal finances, And we make a distinction between what we call and you do it in finance, the active scenario versus the passive scenario. Let's be careful not to draw a conclusion from passive scenarios, because only a blind man walks off a cliff because he can't see that he's walking to the edge. Someone who has their eyes open know in the passive scenario that the passive scenario will not hold, that they will change course. But you don't want to get too close to the edge either.
Okay, I'll continue with the questions from the chat. Is it reasonable for us nationally to meet the standards of the key successful banking players like Switzerland, New York, and Cayman with our aim to be equal versus equitable in the global space?
I don't fully understand the context of the question, but I think the average banking professional in the Bahamas believes that they can rise to the task in terms of delivery of the services that the international banking client is seeking, whether that client gets that service in the Bahamas or in Switzerland or New York. So I think that is the premise on which we operate, that our financial services sector can deliver on those services. But there are also, other standards and requirements within that space that, we have to define. And if you observe very carefully, often, we have to introduce, legal and regulatory reforms so that we can demonstrate the binding nature of certain standards and requirements, particularly in the money laundering and terrorism financing space. That is certainly the case.
Great, thank you. I see Mr. Bobby Chen raising his hand, so I'll ask him to unmute and ask his question.
Thanks, Kriston. Hi, Governor. Hope all is well. My question is a bit more broad-based. As we, as a jurisdiction, embrace and become more attractive to new category of entrants in the likes of FTX and also crypto broker dealers, exchanges, and protocol providers, what are some meaningful ways we as a jurisdiction is able to leverage that new phenomenon into extracting more value for the economy?
Well, the slide that I showed you on international financial services, we are a supplier of international financial services. So whether it's virtual assets, crypto assets, banking, securities, it's how we will be able to provide value added to international clientele. That's always going to be important. And we have to recognize that that is also the case for entities such as FTX and others who are coming here. Their client market is still an international market. And so the Bahamas has to be able to provide competitiveness in allowing them to service those markets. Their comparative advantage will never be in serving a population of 400,000 people. That population size creates inefficiencies in terms of the scale of operation, which would not justify it. So we have to look at it that in the sense that the value added that they are providing is still and must be provided to an international clientele. And therefore we think about how the Bahamas can support that. The way we've done it elsewhere in international financial services is that we have a highly skilled and competent workforce. So we should be thinking, medium to long term around how we can feed in to the skill set needs of those industries to be engaged in those industries. And I think from that point of view, you will continue to strengthen the case for those kinds of operations being located here.
Okay, thank you. I see two more questions in the chat. Governor, please expand on your comment that there is increased capacity to finance deficit in local currency. Does this relate to the central bank's ability to add more government debt to its balance sheet?
No, it's not. It's not relating to the central bank's ability to finance the government. What we look at is the financial resources which are available in the banking sector, and the extent to which they can be drawn upon, whether it's the institutional or personal investors or the financial institutions themselves. That we see greater capacity in terms of the share of the government financing that can be supplied from those in the present period, say compared to 2020 and beyond. And just understand, as I said before, if you're drawing down on credit in the Bahamas and you're expensing those funds, a big part of how you expense those funds is having access to foreign exchange to pay for whatever it is you're acquiring. And what we're saying is that the flow of foreign exchange into the Bahamian economy has significantly improved compared to where we were during the pandemic, at the early parts of the pandemic. So that in itself means that more of the financing needs can go back out through the foreign exchange that are coming in and being converted into local currency. So that's a part of how you need to look at whether it is sustainable to finance increasing levels of credit in the local economy now versus before. If we did not have the capacity to borrow in the external market at the height of the pandemic, then you could not, well, let's put it this way, you can't create foreign currency, you can't create foreign exchange. And inevitably, to get by, you would have needed the foreign exchange from some source. So that's the shift. In addition to that, we also acknowledge that the outcomes that we realized for the external reserves were not the levels that we were targeting, in the sense that we always anticipated that there would be more activity around, say, the rebuilding efforts of from Hurricane Dorian. In the pandemic, in the height of the pandemic, those type of activities were also at a standstill. So it means even if those resources are destined to be used, they weren't used for other reasons. And so there's no intention in any of this that we should be locking onto those permanently. So that also explains why, you know, we say that there is more room to allow some of the outflows, and even if some of those outflows are driven by how the government is accessing financing.
Okay, thank you. A few more questions we have in the chat. You mentioned the ability / flexibility to increase taxes. In what areas of the economy were you speaking?
Can you explain that? Can you, you asked me a question about taxation, right? Like I said, as Bahamians, let's acknowledge, let's confess, the only taxes that we've kept off the table until now, and we've mentioned from time to time, is income taxes. Now, I think from a policy point of view, the Bahamas have signaled that it is not ready to go in that direction now, but it is still an area where there continues to be a lot of work and studies. There's recurring discussions in the Bahamas around how you can make our tax system more progressive, meaning that it is not one where the government's financed heavily through consumption taxes, because then it disproportionately falls on the lower income persons and persons for whom consumption is the greatest share of their total income. So a lot of the discussions that we've been having in the Bahamas has been around, should and if, how should the Bahamas look at reforms, for example, that touch upon income taxes? The other thing that we have to recognize is that forget about, some of the chatter about the high rate of taxation in the Bahamas. Tax rates look very much like size of government relative to the economy. And size of government relative to the economy for the Bahamas might be in the low 20%, versus in many parts of the world, north of 30%. I'm not saying that we should ever aspire or target to be the 30% range, but I use that illustration to show that in terms of what we expect of government and government services, we have the capacity. And some of the way we look at tax policy has to also evolve so that we don't just see it as a solution to a fiscal consolidation issue. We also still have significant public goods needs in the Bahamas, which in an economy or in a country with this amount of wealth and resources, you have to find ways of marshaling the resources to put into public infrastructure. And so from that point of view, we need to recognize that these discussions around reforms are really about, are we prepared? Do we have the means to extract additional resources and put those to good use within the economy? But in a nutshell, the discussion in recent years, let's be honest, I'm not saying anything new. It has evolved around whether we deal with income taxation, how or whether we deal with corporate or corporate in combination with personal.
Okay, thank you, Governor. We have about 2 or 3 more questions, after which you can let us know if you still have time. I know we may be running low on time. But the next question is, given the rising cost of oil and the demand it is placing on the foreign exchange reserves, what are we doing to drive green energy or solar for commercial and residential clients?
Can you repeat that question?
Sure. Given the rising cost of oil and the demand it's placing on the FX reserves, what are we doing to drive green energy or solar for commercial and residential clients?
Well, one of the exchange control reforms which the central bank would have put through, I think, sometime in the last 3 to 4 years, was that insofar as commercial investments are concerned in energy projects, and that was one of those areas where the exchange control policies are also very receptive to businesses raising funds from outside the Bahamas and foreign exchange in order to equip themselves with renewable energy systems. I think there have been at least 2 examples in the Bahamian private sector where we've seen that happen through the private sector arm of either I think it was the Inter-American Development Bank. And so we support more of those types of investments and more, I think, movement in those directions, particularly in terms of how one would accommodate those. I don't think there's any difference there between, how the exchange control framework is being tilted more towards permitting investments, whether it's in energy savings or in other areas which lessen the foreign exchange use burden. But at the same time, I think, again, we have to be mindful in all of this that we are making these investments for payoffs into the future. We've learned our lessons, and we've learned our lessons, and we've learned our lesson. But in the midst of some of the crisis and the challenges, you're reduced to just managing from a crisis management point of view, focusing on renewables and other types of investments is around how you build the resilience, medium and longer term. And it's certainly something that the Bahamas should, pursue with continued and perhaps even greater vigor.
Okay, thank you. Two final questions. What initiatives are the central bank using to get more buy-in of the sound dollar currency?
Our focus is immediately on providing the interface between the sound dollar platform and the banking system. The next focus this year is on expanding the base of businesses that are going to be a point of sales acceptance point for sound dollar. We're also going to begin to engage with commercial banks, because really, some of the resourcing limitations would have been on the central bank side. There's been lots of speculations around how the banks view the digital currency, but the reality is that as we focus on building up the infrastructure, we haven't yet put the kind of resources into the attention that we should be giving to commercial banks. However, this year, we are going to begin to design, use case examples with the commercial banks so that they can also be engaged in helping to extend the reach, not just of the sound dollar, but more extend the reach of the concept of mobile payments as substitute for cash in our economy. And so that's a focus that we're going to get more into over the course of this year. But to complement our pitch to the commercial banks, we do not want yourself as a customer to have sound dollars on your phone, and then the only thing you do is search for a cash dispensing machine to get the monies out. So parallel with that, we are focused now on how we're going to grow the merchant base and how we get the existing providers of merchant services in the mobile wallet space, how we work with them to promote the interoperability, which we've achieved across the platforms. So those are some of the key components of our strategy in terms of how we will begin to ramp up our adoptions push.
Okay, thank you. And one last question I have in the chat. Is there a possibility to further liberalize exchange controls from their current levels?
Yes, although what we're saying is that in the immediate present environment, you still have to proceed with caution. One of the very important liberalization that we did in the last 2.5 to 3 years was the way in which the public gets access to investment currency for investments abroad. And just as an example, before we did some of the liberalization, including reducing the premium that you pay to buy investment currency, which was as high as, at one point, it used to be as high as 25%. It's now down to 5%. Before that, on a yearly basis, Bahamians would request to make maybe $20 million or close to $30 million in investment paying those premiums. In 2019, there was almost $80 million in outflows through the investment currency market. I believe that in 2022, it could rival 100 million. And that is also because we reformed the system so that Bahamians could establish trading accounts with the local trust companies so that they could custody their securities. And we also give them the flexibility in that process to buy and sell within the portfolio. And that was a major change from when we used to say, whenever you buy or sell a share, even if you had an account, you have to report it and get approval. So that flexibility to trade also has been attractive in making Bahamians, giving Bahamians more access to portfolio investment through the investment currency channel. And I also wanted to say that, even though it not come up, is that those same channels exist for those who are looking at investing in virtual assets or cryptocurrency or crypto assets, whatever you want to term them. And we do see lots of persons who come into us and request the permission to engage in those types of activities, and we approve them. I think if there were to be near-term changes, rather than in liberalizing the access levels, et cetera, our focus would be more on the administrative process. And in a lot of the other areas where it's involved trade, administratively, we've left it up to the commercial banks to do certain things. And it's being suggested that, at some point, similar types of structures might be put together for portfolio transactions that need access to investment currency.
Okay, thank you. We do have one more question if you have the time, and then after this, I will stop and then give us a moment. Governor, do you fear government debt financing will crowd out the private sector, or that the private sector will crowd out government? This comes down to the risk-return profile of private sector offerings versus government debt.
I do not foresee that likelihood in the present environment. I believe, for the amount of liquidity that's in the system, that potential private sector actors would have to continue to focus on the risks around the returns that they're putting forward. And I think we saw some cases last year where their funds were raised, particularly say with the cruise port expansion. And to the extent that there are more of those types of ideas being conceived, I think it would be good to see those come out there. But the liquidity is adequate. And also understand that in terms of how the monetary policy, fiscal policy interact, if we got to a point in the future where the credit expansion started to become very heightened, then the dialogue between the central bank and the Ministry of Finance takes that into account in trying to understand what is a feasible amount of financing that the government can draw from the domestic space. There are no tensions in that space, in our view, in the near term.
Okay, thank you. For right now, I'll pass it back to Jerome.
Governor, do you have time for one more question? I see Tiasha has her hand raised.
Okay.
This will be the last question.
Thank you so much, Mr. Franks. Good evening or good afternoon, Governor Rolle. I just want to say thank you so much for this presentation. I see a lot of my lecturers on the call, and I want to thank Mr. Grant for this opportunity just to be here as a University of the Bahamas student. So pretty much my question is relative to your to the mention of the sand dollar and the mobile payments. So I'm currently doing a research on MSMEs in the Bahamas and their behavioral intent to adopt e-payments. And I want to know your prediction on when you think majority of our population would be likely to adopt this e-payment system or mobile payment or digital currency system, considering that there are a lot of people who are currently reluctant to the digital world, pretty much.
Rather than predict the when you hit the majority, I know that also that there are a lot of people who said, when are we going to get the sand, or when are we going to get these products which are already out there? However, we also know that when it comes to adoption, when you move beyond all of the logistical issues, it does also become an issue of comfort in moving around in the digital space, and important education around how to be safe and responsible in that space. And despite all the fears that we have about the digital space, that checkbook and those physical means of transacting, they introduce more financial risk for the average user of the financial system than they might realize. So you would see that even at every single financial institution, there's focused education on the street smart, if you would call it. So street smart way of using digital channels to manage your finances. Simplest issue as being able to see when things are happening on your account. So getting people to be comfortable with the process, getting them also to understand how to protect themselves against potential fraudulent transaction, and also dealing with concerns that people have about Big Brother or somebody looking into their privacy. What we need to recognize in the Bahamas is that the opportunities exist to improve the environment around data protection and privacy, because we're all creating significant amount of footprints digitally in our transactions today, and we are in many cases unaware as to how our data is being used. In getting the population to embrace digital finance a lot more, we're also addressing and confronting head-on the policy issues around digital finance. So even in the Bahamian, for example, payment system legislation and regulation, a big part of the focus in that space is around the consumer financial protection, the disclosure requirements of financial institutions around that process. And so we're going to continue to build that out, because the alternative of excluding yourself from that space is not a viable option for the Bahamas. And so we have to address the concerns that individuals have, including, like I said, the logistical ones. And one of the logistical ones is getting people comfortable with using the technology. But we've also demonstrated, whether you're grandma, grandpa, or whomever, that you do a tremendously great job of using social media and a lot of the other tools to communicate and interact. And so, we can capitalize on that and use it to help bring people into this digital finance space.
Thank you once again, Mr. Rolle, for speaking with us today. We are truly grateful for your time and knowledge shared with us. To everybody, we're still getting questions in, but clearly we have to be respectful of Governor Rolle's time. There was definitely a lot to unpack in this presentation, and we will make it available to everyone who is registered. Once it's ready to be accessed, we'll send out information via email, as well as social media, on how to access a replay of this presentation. So, Governor Rolle, do you have any last comments you want to leave us with?
Only one comment. I did not say you should have income taxes. I said you should not ignore the fact that that is an option that the Bahamas has. And so to the extent that the Bahamas is not yet embracing it for various reasons, we need to understand that that does not mean that it's a permanent state. And we need to appreciate how it features in our medium and long-term possibilities around improving our entire infrastructure. So I just want to make that very clear, because I know somewhere tomorrow is going to say central bank or governor says such and such for taxes, but this is not the first time we've talked about it. But I just wanted to say that just by way of amusement, because we all think it, and we need to confess it and profess it more.
Yes, so definitely to the media people on here, please do not misquote the governor. So thank you, everyone. Thank you for joining us. I think this was definitely a great event. Like I said, the information, we will make it available to everybody because there's definitely a lot to go over and to understand. So thank you for joining us here today. We look out for more events from CFA Society of the Bahamas. We definitely appreciate your support and your attendance to our events. And once again, thank you, Governor Rolle. We really appreciate your time. Thank you, everyone. Take care and enjoy the rest of your day.